All right, hi everybody. Today we are looking at an extremely well-run and extremely profitable business that might be one of the best businesses in the world, and that right now may also be trading at an attractive valuation, leading to satisfying returns going forward. So which business am I talking about? Let me quickly run the intro and then we'll discuss what I have in mind. All right, the business that I'm going to be talking about today is the company called Valuation Gaming, which is a Swedish company in which I briefly already addressed in one of my recent videos in which I suggested or discussed my 5 most interesting ideas for 2025. So as you can see, the stock of Valuation Gaming has performed incredibly well over the last 10 years plus. So we just look at the past around 10 years, for example, then the stock is up something like 50x. And over the last 5 years alone has compounded at a rate of around 24%. And I think over a longer time frame, the business has done even better. However, and this is reflected by these two charts, the stock of Valuation Gaming has performed more poorly over the more recent past. So as you can see, ever since the peak in late April 2021, the stock is actually down by more than 50%. And also over the more recent past, ever since March 2024, so ballpark 1 year, the stock is also down something like 36%. And there are, of course, various reasons for the more recent underperformance of the stock, but I think one big one that you have to acknowledge when analyzing Valuation Gaming is the regulatory environment the business is operating in, and also the regulatory risk that comes with that. And I guess one noteworthy news worth mentioning here would be the fact that the UK Gambling Commission recently launched a review of the gaming practices and the operating license of Valuation Gaming in the UK. But we'll get to the regulatory risk again a little later. For those who don't know the company, what does the business actually do? So basically, the company is operating in the live casino space, and it's offering a bunch of different games in the live casino segment. For those who've never heard the term live casino before, it's basically casino games that are streamed online and that people can access from home. But these casinos give you like a real world atmosphere. They seem quite authentic. It almost feels like you are in an actual casino. There are real human beings, real dealers that are, well, operating the game in real time. And these live casino solutions, in the case of Valuation Gaming, represent around 85% of Valuation's overall revenue. 15% are generated by a different type of game or different types of games, so-called RNG games, random number games that are more algorithmic in nature and don't require a human dealer. And respectively, this segment makes up around 15% of Valuation's overall revenue. Let me just read the business description from Koifin to you here. So they write, Valuation AB develops, produces, markets, and licenses online casino systems. So basically, and that's important, worth highlighting too, it's a B2B business. So casino systems to gaming operators in various regions, basically all across the globe. It offers casino games and live game shows under the Valuation brand, online slot games under the NetEnt brand name. So those would be the NRG games, and software comprising jackpot systems, smart spins, bonus management application, and tournament gamification under the Red Tiger brand, and so on and so forth. I think you get the idea. And what I said in my 5 ideas for 2025 video is just look up Valuation Gaming and some of their names on YouTube, and you will get a feel for what their offering is all about. They offer these games and solutions to online casino providers, which then can embed these games into their user interface. And I think what makes Valuation Gaming also quite unique is their very broad game portfolio. So Valuation Gaming is the leading company in that space, and they can basically be considered a one-stop shop for everything an online casino game provider can imagine or wish for. And some of these games are classics like blackjack, baccarat, or roulette. But then they also have their own games, which the Valuation Gaming product team has developed, which they have patented, of course, and that are quite unique in nature, I would say. The most famous one that Valuation has developed could be, like, I'm not a consumer myself, but from my understanding, Crazy Time is a highly successful game that was developed by Valuation itself. Now, you might wonder, how does the company actually make money? Well, basically, their business model is for the most part based on commissions. So whenever an online casino game provider makes a profit from its clients, Valuation gets a small cut of this profit, which you already guessed it, leads to very high profit margins on Evolution's end. What this table here shows, and I think that's also something worth highlighting here, is where the revenue of Evolution Gaming is actually coming from. So as you can see, Asia is the biggest market, and over the more recent past has also been the fastest growing market. The US, as of today, I don't have the percentage here, but represents a relatively small share of the geographic revenue sources or revenue streams of Evolution Gaming, and hence also represents an opportunity. And I think that is something you don't find nowadays very often. Usually companies are operating in the US, but the US business represents the more mature part of their overall business, and most of their growth will have to come from other markets. I'm thinking of Starbucks here, for example, some of the luxury companies, luxury fashion companies, and many others, of course, as well. In the case of Evolution Gaming, things are a little different. So obviously, many markets in the US will have to be regulated before Evolution Gaming can actually enter them. But I would argue that the US, with its big economy, vast consumer base, could be a growth driver for the company going forward. Now, some of you may wonder, what is the mode? I was already highlighting the fact that Evolution Gaming is basically a one-stop shop for many of their customers. I think as of today, they have around 800 different customers, but there's more. I think, which is sort of a mode that is hard to grasp, is the level of innovation you are seeing at that company. So, as I said, my understanding is that the product team of Evolution Gaming is just superb. They are very creative when it comes to developing their own games that are highly successful, and that consumers are also then demanding from the actual providers of these games. So what I would recommend you just do is you look up the chief product officer of Evolution Gaming. His name is Todd Haushalter. Check out an interview with him, or maybe multiple, and you will get a feeling for how this product team operates. And what I should also say is that many of their games are also award-winning. So I guess that's sort of a label that also highlights how well produced these games actually are. What else do we have? I think what they are doing is also just very, very hard. First of all, there is regulation, and operating in the online live casinos segment globally is just very hard to do, because you will have to make sure you are regulatory compliant in all of these different regions with all of their different demands. You will have to solve problems like cybersecurity, potential cheating, potential errors the dealers are making, stuff like that. And then you also have to operate studios all around the world. You have to require dealers for these studios. You have to make sure these studios run all around the clock. I think, generally speaking, that's not an easy business to be involved in. It really requires great execution, which probably not many management teams can actually pull off. Which brings me to the financials. So I think in the introduction I said that Evolution Gaming might be one of the best businesses in the world as of today. If we look at the financials of this company, there's just so much to like, and I just want to highlight a couple of things here first of all. So this chart here, for example, just shows the development of revenue of Evolution Gaming over time, and also free cash flow. And as you can see, both metrics have increased by quite a fast clip over the long term, actually. So their operating income has actually compounded at a rate of 63% over the last 10 years. That's a truly astonishing growth rate. The net income has compounded at a rate of almost 65%, and free cash flow has compounded at an even faster clip of 66%. Revenue, on the other hand, has quote unquote only compounded at a rate of 45% over the last 10 years, but still, that's more growth than you can actually ask for. What I will say is that this growth has partly been driven by the overall growth of the industry. So I read that between 2019 and 2023, for example, the online gaming segment has compounded at a rate of 20%. And with Evolution grabbing more market share in that space, they were able to pull off that really high growth over the last 5 to 10 years. However, and that's also worth highlighting, and you can see that in the table above, over the more recent quarters, growth has also slowed. And I guess going forward, and I guess you also have to point out that there has been sort of a COVID boom as well. Going forward, I think the growth rates are going to be a little more moderate, probably in the low to mid-teens. And I'm also not quite sure, like I was just highlighting that the business of Evolution Gaming is producing some really good numbers. This is also reflected in the margins of this company. So as you can see, we have EBIT margins above 60%, free cash flow margins above 60%, net income margins above 50%. You don't see these numbers very often. What I will say is, going forward, I think there's a good chance that these margins will come down at least a little bit. I'm not saying we're going to see 20% margins for this business, but maybe margins that are closer to 50%. And I don't really expect these numbers to stay above 60%. This is partly also driven by new tax laws. I think there's a global initiative that the tax rate internationally should be at least something like 14 to 15%. I think many of the profits went through their Malta division, and I think they only paid a tax rate of around 7% over there. So that is going to eat into their profits, which of course isn't reflecting that their business structurally is becoming worse. It's just the tax regime they're operating in. But still, I wouldn't be willing to bet on 60% plus margins going forward. I think there's a good chance that they will come down a little bit over the next couple of years. What you could also highlight is that from a balance sheet point of view, Evolution Gaming is also a very healthy business, where very little debt. They can cover their debt with their cash flow relatively easily. And that is not something investors really have to worry about. Which brings me to valuation. So basically what we are seeing here, and full transparency, I don't own this stock yet. But sometimes I wonder, well, René, why do you not own this stock? This really is a world-class business. And after the more recent price pullback, it doesn't seem to be trading at a particularly demanding valuation right now. So just two metrics here real quick. So going forward, the expected growth rate for 2025 and 2026 is in the range of, as I said, low teens, 13, 14%, which is still very decent, right? I would underwrite that growth for a stock trading at the right valuation every day over the week. And you can combine that with the current valuation of Evolution Gaming, which is only trading at a free cash flow yield of around 8%, a little lower. So if you combine the two, 7% free cash flow yield, that's basically the free cash flow the company could pay out to shareholders directly. And in the case of Evolution Gaming, the company actually will. I'll get to that in a second. If you combine that with the expected growth over the near and medium term, well, you probably already get a market-beating return above 15%. However, there are also risks to be aware of, which I will address in a second. Before I do that, let me quickly pitch my mentoring program here real quick. So going into 2025, I right now have the capacity again to onboard 5 more clients. So if you want to learn how to analyze, research, and value stocks with a process-driven framework, how to generate returns that beat the market consistently over the long term, you should check out my website in which I reveal what I have to offer. Hand in an application. If I think you're a good fit, we will have a call, we will get to know each other, and then we might work together for a couple of weeks. Getting back to Evolution Gaming. So why do I still not own the stock? Which brings me to the risks that I think you have to be aware of. So I just mentioned that going forward, in terms of capital allocation, the management team of Evolution Gaming has actually shifted their strategy a little bit. Historically, they try to pay out around 50% of their free cash flow to shareholders, either via a dividend or via buybacks. Going forward, they plan to distribute all of the cash flow back to shareholders, primarily via buybacks, or if they think the stock is trading at too high of a price, via dividends, which are of course a little less tax efficient. So I think that is something many investors will like to see. I, on the other hand, feel like that is something that is holding me back a little bit, because ultimately I'm looking for stocks that can continue to compound at a very high rate. And usually this requires reinvestments back into the business. Basically, the growth rate is the reinvestment rate multiplied by the return you earn on these reinvestments. And if a company is slowing down their investments, that will lead to a lower compounding rate. Obviously, there are some businesses, and that would be maybe the positive note here, that can grow without reinvestments. That's actually the best thing you can hope for. And I'm expecting, just due to industry growth and secular tailwinds, that Evolution Gaming will continue to grow without them actually needing to reinvest significantly into the business. Nonetheless, I don't expect the business to be like a very high compounding stock from here, from a free cash flow point of view, just because they apparently don't see that many reinvestment opportunities anymore. So I'm not sure. That one is giving me pause a little bit at least. Then why else do I not own the stock? I guess one reason could be anchoring bias. So the stock has come down quite a bit. However, from the more recent bottom, it's also up again another 10%. And I will admit that that is holding me back a little bit. I know and acknowledge that's not a rational reason for not buying that stock, but I think it's affecting me a little bit here. And I want to be fully transparent about what I'm thinking here. And then thirdly, and I guess that's the most important point, I have had Evolution Gaming on my watch list for quite some time, multiple years now. Actually considered it at a share price back in the 60s. I don't know, I guess that was 3 or 4 years ago. However, I think I will have to do some more work on that name to truly develop and build the conviction in the name that I need to add a business into my portfolio. So I was already talking about the regulatory risk, and I think that's a very real risk you have to be aware of. And I'm not sure if I fully grasp and can put probabilities on that risk, which is something that is holding me back right now. If some of the regulatory risks were to unfold, this could truly impact the business operationally and fundamentally. Someone in my community, for example, brought up the story of Full Tilt, which I recommend you check out there, maybe just a YouTube video on that matter, which was an online poker provider. And at some point, if I remember correctly, their license was withdrawn by US regulatory agencies. And so they just had to stop their business basically from one day to another. And that is a risk that Evolution Gaming is also facing. I'm not saying that's a high probability risk, but that is something to be aware of. Sort of a slogan that I have memorized and that I think is very important. While regulations can be a source of a moat, what the regulatory regime gives, it can also take away from you just as quickly. And that is a risk to be aware of. And one could argue that this risk alone justifies that Evolution trades at a slight discount to peers that are not exposed to that risk. And that regulatory risk does not only affect the business segments of Evolution Gaming that are already regulated. No, as of today, I think around 60% of the overall revenue actually comes from business that is conducted in so-called gray markets. So this means gambling there is not fully legal, it's not really regulated, and it remains to be seen whenever regulators start to step in what this does to the industry in that particular region. And maybe finally, just today, Evolution Gaming released the following news. The CFO of Evolution Gaming stepped down. We are not sure if this was a decision by the CFO or whether the board of directors made him step down. But when the CFO of a company has to leave for whatever reason, that is also something that's giving me pause. And I will have to do some more reading on what's actually going on here and what the driving factors behind that decision are and were. All right, that should be it for this video. Let me know what you think of this stock, whether you understand some of the things that are holding me back right now, whether you think these risks are worth considering and justify not investing in the stock yet, or whether you think we have a very attractive opportunity presented by Mr. Market due to the uncertainty that comes with, for example, the UK Gambling Authority news that created uncertainty. But then also remember, the UK market only represents around 3 or 4% of overall revenue for Evolution Gaming. Yeah, that's it. Take care. See you in some of my next videos.